Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. Students, in the previous class we have solved problem number 3, page number 104, isn't it? Now let us move on to problem number 4, page number 105. 105. I will read out the problem and in the meantime we will analyze and we will solve the problem. From the following balance, prepare statement of profit and loss for the year ending 31st March 2018 as per schedule 3. It is given, it is 6 of Companies Act 2013. Yes. Cash sales 2 lakh, credit sales 3 lakh. Very simple. Both sales should be added together. That will be cash and credit. There is a total sales. We have to take total sales as cost of material consumed. Remember. Sales returns should be deducted. Cash sales, add credit sales, total minus sales returns should be the net sales. Correct. Cost of materials consumed, no doubt, is given in the problem. That is nothing but purchases. It is purchases. Buildings not required for us. It is balance. It is asset, fixed asset balance sheet, isn't it? Machinery again balance sheet. Bad debts. Bad debts is an expense because when we write off the debtors as we will not recover it ever, isn't it? When we get confirmation that this person, the debtor, will not pay the amount and we will treat it as bad debt, isn't it? Is an expense of the business. It should be entered under other expenses. Other expenses. Then tax. That's all. Nothing else. Depreciation on buildings and machinery at 10% per each. This is required because this is an expense which should be charged to profit and loss, statement of profit and loss. We will record under what? Depreciation and amortization. Am I correct? So for that reason the building and machinery values are given. But building and machinery values are not required for us. Only depreciation part is required for us to prepare statement of profit and loss. Clear? Yes. Now let us start. Statement of profit and loss. Statement of profit and loss. Profit and loss for the year ending. For the year ending March 31st. March 31st. 2018. Yes, it is 2018. Yes, 2018. Yes, let us start. Particulars, note number. I will not write the column headings. Just write the column headings. Particulars, note number. Figures as at the end of current reporting period, rupees. And figures as at the end of previous reporting period, rupees. Write the headings fast. Do it fast. Let us move. I will start. Revenue from operations. Revenue from operations. First one. Revenue from operations. Revenue from operations, correct. How much? Note number 1. We have to prepare note number for this because we have to do the calculations. Notes to accounts. Notes to accounts. Leave space in between. Fine. Yes. This is particulars amount in rupees, amount in rupees. Particulars, amount in rupees, amount in rupees. No debit credit, friends. This is statement, this is not an account. Remember. Don't write debit credit here also. So here we have to write what? Revenue from operations. Note number 1, revenue from operations. Revenue from operations. Under that, cash sales, credit sales. Add it together, write the amount, how much? 2 and 3. Inner column, 2 lakh and 3 lakh. Isn't it? So 5 lakh, 5 lakh minus sales returns. Sales returns or return what? Return inwards. Return inwards, right? Yes. Or returns debit. Returns debit or returns inwards or sales returns, all three are one and the same. Don't get confused. We have studied in first year. I don't know whether you remember it or not, but you have studied it. Yes. What is the value? 20,000, right? Yes. So this is the net amount of sales, that is revenue from operations, that you should record here, 4,80,000. Now, Roman 2, isn't it? Other income. Other income. Are there any other income? No. So, nil. Write the total, 4,80,000 again. Isn't it? That is called total income. Total income. Total income. Now, let us move on towards expenses side, fourth one. Expenses. Under that, cost of materials consumed. Cost of materials consumed. Materials consumed. Cost of materials consumed. How much? 3 lakh, right? Yes. How it is given? Yes, cost of material consumed. Then other expenses. Other expenses. Before that, depreciation and amortization. Depreciation and amortization. Amortization, how much it is? Depreciation and amortization, is it 35,000? 35,000? Yes. Depreciation on buildings and machinery at 10% each. So we have to do calculations here. Machinery and building separate figures are given. So 30 and 20, 50,000 we have to charge. Correct. Is it correct? Buildings value 2 lakh and this is 1,50,000. I'm sorry. 20,000 and 15,000 is the amount. So let us prepare here depreciation and amortization. If there is a calculation, provide note. No need of assigning the same number. Depreciation and amortization should come 2 only. No, it is not like that. Only one item is there. Give one number 1 to that. That's all. Correct. Depreciation and amortization. Amortization, how much it is? The calculations. Building, isn't it? Building, that is 2 lakh, 10%, right? Yes, 2 lakh into 10%. 10% comes to 20,000. 20,000 and machinery 1,50,000 into 10%, 15,000, together it will be 25,000. 25,000. So here depreciation amortization, note number 2. Note number 2, how much it is? 25,000. 25,000. Then what? Other expenses, that is bad debt is given, right? Other expenses, how much it is? I think 5,000, is that correct? Yes, it is 5,000. So these are the total expenses. Total expenses works out to 3,40,000. 3,40,000. That is total expenses. Total expenses. Expenses, that is 5, isn't it? Now, how to arrive at profit before tax? Profit before tax, that is PBT, correct? So we have to deduct 5 from 3, correct? Yes. What's the difference? Difference is 1,40,000. 1,40,000. That's all. That is PBT. Now charge tax. This is 6. Tax 7. At the rate of 30%. At the rate of 30%. So 42,000, correct? So your profit after tax PAT will be 98,000. 98,000. That's all. Your problem is solved. That is called profit after tax, or PAT. PAT. That's all. The problem is solved, isn't it? Now let me move on to the next problem. Very simple problem it is given. So let me solve it. Problem number 5. Take down. Open the book and see problem number 5. From the following balances, prepare statement of profit and loss for the year ending 31st March 2018 as per Schedule 6 of Companies Act 2013. Sales, no doubt you know it very well. Revenue from operations, isn't it? Cash purchases, credit purchases, you have to add it together, club it together, that's all. Whatever we did in the previous problem. Purchase returns, what you have to do is, you have to just deduct it from the total purchases, isn't it? That is the net purchase. Power and fuel and consumption of stores to manufacture the product. Consumption of fuel is required, that is a fuel cost is there, power and fuel, and consumption of stores. Stores means those which are used in the manufacture of products, isn't it? So comes under other expenses, both comes under other expenses. We have to prepare a small note for that. Interest on bank loan, no doubt, interest on bank loan is a finance cost. So you have to easily we can solve it. I will not erase the entire thing here, isn't it? I will take up this figure part, I will change, that's all. Other format remains as it is, no change, there is no change. So draw the columns. Statement of profit and loss, write the heading as it is, no change. Date is also same, 31st March 2018. So statement of profit and loss for the year ending March 31st 2018. And then we'll start cash purchase and credit purchase. Here we will make it as cash, sales will change it as purchase, that's all, right? Yes. Then one more is there, that is we have to add two items together, other expenses, right? consumption of stores and power and fuel. So that we will take up here. So here revenue from operations, that should be taken as cost of material consumed, cost of material consumed, cash and credit. Then purchases returns. Yes, cost of material consumed, under that cash and credit. Cash and credit, write the amount. Cash how much? Cash purchases 2 lakh, credit 4 lakh, 2 lakh. Let us write in inner column, right? 2 lakh and 4 lakh. Here credit, right? So it will be 6 lakh minus returns 6 lakh, correct? Minus returns, how much it is? Returns is 20,000. 20,000. So it will be cash purchase 2 and credit purchase 4, total 6, correct? So purchase returns 20. So 5,80,000 is the answer. 5,80,000, correct? Yes. Yes, then second one, note number 2, we have to calculate. That is expenses, right? Other expenses. Note number 2, other expenses. Under that, you have to write power and fuel, and stores. Power and fuel, how much? 30,000 and the other one is 50,000. 30 and 50,000. So 80,000 in outer column. 80,000 in outer column. That's all. Our note is ready. Now, revenue from operations, how much? 10 lakh. Note number is not required for that. Straight away it is given in the problem. Other income, nil. No other income. So 10 lakh, correct. This is total income, 10 lakh. Roman 3. Let us move on to expenses side. Expenses, cost of material consumed. Note number 1, cost of material consumed. We have already calculated how much it is. 5,80,000, right? 5,80,000. Then finance cost, depreciation and amortization is not there. So finance cost straight away. Finance cost, how much it is? I think it is 30,000, 80,000, right? Yes, already it is given in the problem. Finance cost, interest on bank loan 30,000. Interest on bank loan 30,000. So finance cost 30,000. Then other expenses, we have already calculated. Other expenses, correct. Note number 2. How much it is? 80,000. Now take the total of all the expenses together, it comes to 5,90,000. 5 lakh, not 5 lakh. I think it is 5 lakh, 6 lakh. Yes, 6,90,000. 6,90,000. Yes, it is total expenses. Now, profit before tax 3 minus 5, correct. How much it will be? Profit before tax, is it 3,10,000? Yes, it is 3,10,000. 3,10,000. Now, deduct tax at the rate of 30%. 30%, that is 3,10,000 into 30%. 30%. Calculate and write the amount. It is 93,000. 93,000. Deduct it and write the net amount, that is profit after tax, that is PAT. PAT is 6 minus 7. 6 minus 7 is equal to PAT, that is profit after tax. How much it will be? 2,17,000. 2,17,000. So that is how you have to solve a problem when it is given to prepare statement of profit and loss. I think it is very easy, right? Yes. So solve the second problem, this one, whatever I have solved just now. Solve that problem and submit your answer on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.